Hey guys, today we're talking about mutual funds. These are like investment baskets. They pool money from people like you and me. This money is used to buy stocks or bonds. Mutual funds are managed by experts. They try to grow your money over time. Mutual funds are great for beginners. They offer an easy way to invest in the stock market. Don't worry, we'll break down the different types. Stay tuned to make smart choices for your financial future. First up, we have equity funds. These funds mainly invest in stocks. Think of companies like Reliance or Infosys. Equity funds offer higher returns over the long term. This is because they are linked to the stock market. Remember, higher returns come with higher risks. The stock market has its ups and downs, but if you're patient, equity funds can make your money grow big time. Next, let's talk about debt funds. These funds invest in fixed income securities. This includes things like government bonds. Debt funds are generally considered safer than equity funds. They offer more stable returns. However, their growth potential is lower compared to equity funds. Debt funds are good for short-term goals. Now, for those who want the best of both worlds, we have hybrid funds. These funds invest in both equity and debt. This provides a balanced approach to investing. Hybrid funds aim to minimize risk while still aiming for growth. They are suitable for investors who want moderate risk and returns. Last but not least, we have sectoral funds. These funds focus on specific sectors of the economy. This could be anything like technology, healthcare, or energy. Sectoral funds can offer high returns if the chosen sector performs well. However, they also carry higher risks if the sector faces a downturn. Now that you know the different types of mutual funds, let's see how they align with your financial goals. If you're young and saving for retirement, equity funds are a good option. They offer long-term growth potential. For short-term goals like buying a car, debt funds are a safer bet. Hybrid funds are suitable for medium-term goals like your child's education. And if you're feeling adventurous, you can consider sectoral funds. Like any investment, mutual funds have their pros and cons. The biggest advantage is professional management. You don't need to be a stock market expert. Mutual funds also offer diversification. This helps spread your risk. However, mutual funds come with fees. Make sure you understand the expense ratio before investing. So guys, that's a quick overview of mutual funds. Remember, investing is the key to growing your wealth. Start small, invest consistently, and watch your money grow. There are many tools and resources available to help you make informed decisions. Do your research, consult a financial advisor, and start your investment journey today.